We'll have a club meeting convening on Friday where Jeff and I, just among many things, will show you how we bat around, exactly what we do each morning, going down the list. And I think it'll be very instructive for you. So I look forward to it. Today, we have a kind of it's not a do-over, but we have a kind of a hangover. We had a very nice move back to interest rates backing up a little bit. Yes. And nothing new in the Middle East other than the fact that people still think that maybe there's some rockets are going off here or there. Mm-hmm. They continued. That would be not in sync with what the president's talking about. But I think the most important thing is that Saudi prince pushing Trump to keep the war going. And what that says is that Iran may be beginning to face a coalition of the willing.
Yeah, maybe nothing new, but maybe more confusion, right? We are seeing mixed headlines. Who exactly the administration is negotiating with in terms of this 5-day peace deal, if you want to call it that. But, we said yesterday, not a great day to chase the market when it was higher. Just whenever you have these mixed headlines, you just don't know which way it could go next, and it cut negative here. But I think that puts us in a better position to scan the portfolio, look for things to nibble on that are still down, going back from last Friday's sell-off, even though we did have that bounce yesterday. So we are looking around here. Oscillator still oversold 5.2%. With the 10-year moving up and oil moving up, maybe we're looking for levels that the administration's also looking at where they don't want to see it cross, whether the 10-year 4.4% on the 10-year yesterday before the Truth Social post, maybe they don't want it to see 4 or 5. So maybe I'm afraid to use the term, but a put is being created.
But what's happening is that we have a thirst for hardware today, but software is under tremendous pressure.
Yes.
And there's a lot of people who feel like my friend Ben Righteous at Melius, look, AI ate software. We get that constantly. But what I come back and say is we've been saying that Microsoft is challenged. We have two buy recommendations today, and they can't move it. But I do like CrowdStrike down here.
Yeah, we continue to point out that if there is a category insulated by software pressures, it should be cybersecurity. They are the ones, gatekeeping the agents, so to speak. So very mission critical business that you're not going to want to let an LLM do for you, because an LLM can hallucinate,
right?
But
and
CrowdStrike has to get it right every single time.
Right, and you can't have an LLM also being your cybersecurity agent, because that would not be something that the insurance companies would allow. Yeah. Insurance companies rule here. So I'm tempted to buy a little.
It is interesting to see the software struggles. They kind of go hand in hand with private credit,
yes,
which there's still a hangover on those stocks. We don't own BlackRock anymore.
I think that's what's causing this.
But there is that as well. Not as much of a,
I'm sorry.
I was going to say not as much of a bleed into some of the other financials. I saw Wells Fargo hanging in there today. Goldman may be down, but it's had a nice move over the last week and week or so.
I mean, Wells Fargo, someone said, has more exposure to software than others. That's just not true. I mean, I know you can say whatever you want and not get in trouble, but that's not the way we look at it. We want to get the story right. And the story right is very positive for Wells Fargo right now.
Yeah, no, the issues are more on Ares limiting redemptions on a private credit fund. Apollo doing the same yesterday, and a private credit fund jointly managed by Future Standard and KKR got downgraded to junk rating. So
what's
that's
interesting,
what we're working with.
Look, it's not that these companies are about to collapse. I know some people think that's just wrong. These companies will not be able to grow unless they are able to get individuals into private credit, because that area is challenged. But if you can convince people that this is what you want to be in, then they have more growth than if they don't. Now, yesterday, for instance, I read Larry Fink's note, the biggest repository of American savings. And I found that BlackRock is still very keen on trying to get people into private credit. Why? Well, because they have a private credit division that's done really well for people. Yeah. So, I mean, it's not like you're like, wow, let's put them in stuff that's no good. But they have to put them in stuff that you have to have a long-term view. And individuals are not used to suffering. They're used to taking their money out.
Right. And it's categories where you're giving up some liquidity as well.
Right.
So you have to be in it for the long term.
That's why I said, look, we got to sell it because they need the growth, and they were going for private equity among many things. And I just felt, you know what, the market's not going to tolerate this stuff in the new world here. This is a new world because of the war.
Yeah.
By the way, Walmart is up too. That's one.
Yeah, I'm seeing Walmart, Costco doing well.
Costco doing well. So we do have a bifurcation today.
Yeah, I think staples as a category holding up better today.
I think this could break out. We have two events. We know that they're starting just to have standalone gasoline. That's going to attract new members,
Traffic.
which is what they need.
Yeah.
And they give you the example, by the way, of going into Celsius.
Yeah.
And a real price break. Now, the way Costco works, having done sold things into Costco, is that if you don't give them the price they want, they just say, you know what, never mind, we'll make it ourselves. Mm-hmm. And how much cheaper is there?
Yeah, I was going to save this for later, but the Kirkland Signature new sparkling energy drink, $16.99 price point for a 24 can pack versus Celsius, which is about $38. So this is just a good example.
Like what they did with Tito's. I mean, going Tito's. And Tito's, I guess, wouldn't play ball because suddenly they have a Costco vodka in the stores that sell alcohol. And I've got to tell you, it's selling very well.
Yes. I want to go back to Microsoft. So yesterday we mentioned the Melius piece, cutting their price target. Today, Bank of America reinstates coverage, a buy rating, $500 price target, which is more than 30% upside. From here, calling Microsoft the center of the AI super cycle.
Yeah, I hate that term super cycle. You know that. Right?
No, of course. But I think one point from the note, maybe it's worth reiterating. One of the reasons why we've just been holding on here, not buying, but we did downgrade our rating to a 2 the other week. Azure growth, the deceleration, not a function of demand, it's supply constraints. Right. And that's what they've been working through as they also allocate some of their GPUs towards Copilot and R&D. Equipment. You could argue they should just put everything behind Azure and let that run.
I think they should. Now, I think that a lot of people feel that Copilot's not that good. Well, they could always come out with something that's better than Copilot, and they could lay off a lot of people. Next thing you know, you got a $480 stock, and that wouldn't be a surprise. So therefore, we hold not a big position. I do feel that this is people have to understand these guys are very smart. This is not a group that is not competitive. Yeah. They're extraordinarily competitive. So I know that this is a very low price. I know it's down 20%. That makes me want to buy, not sell.
Yep, some other headlines. Estee Lauder talks to buy fashion and beauty company Puig brand, supplementing its fragrance portfolio.
Is a very unfortunate firm, and they continue to do the wrong things. They're just high price. People don't like high price anymore. It's like Lululemon. They don't like high price.
Yeah, Ralph Lauren upgraded at Citi to buy on confidence in
stocks down to a quick 50. I happen to believe the company is very good, but it is pricey.
The FT report that Sumitomo Mitsui planned to take over Jefferies. But
David
Bloomberg
shot that
no
down
immediate
today.
Plans. Yeah.
And people have to understand that Richie Handler, whom I've known since for like 4 years. Rich runs that company in Iron Hand, and I would not bet against that man.
Not a public company, but you have OpenAI, CFO Sarah Fryer on Mad Money tonight.
Sarah Fryer, Sarah Fryer is the CFO of perhaps the most exciting company of our time. And it could end up being a trillion two company right from the get-go. That's quite exciting.
Yeah. Are you going to get into their relationship with Microsoft? What do you plan to ask?
Yeah. Well, I want to understand the ownership structure and get some comfort there. But I really want to talk about the growth, which is extraordinary. And I think that most people want to try to trip them up. They want to say, okay, really, what's the Musk lawsuit? Really, what's that deal with Azure? I want to demonstrate what I think is going to impact you. And what's going to impact you is that they have the most growth of any company I've ever seen. And they're moving from consumer to enterprise. I could keep it so that you can't make money when it comes public, or I can emphasize that, look, this is the real deal. And I'm going for real deal. And people may say I'm being Pollyanna. I've known Sarah for a long time. I have butted heads with Sarah, believe me. But I do think she's in a very good position.
Well, they're one of the big three that could come public this year. Anthropic, also SpaceX. We could see $1 trillion valuations from the start.
Or you could say, listen, they're going to pull the whole market down because they need money to get in. I think they'll be fine. I do think that what's happened is that if you look at private credit, that's a loser versus being in these. People went into private credit not knowing the circumstances, not knowing you can't pull out. And that was a mistake. And all those companies don't have the growth that a company like OpenAI has. This is Jim Cramer, Jeff Marks, the morning meeting exclusive for the CNBC Investment Club.